Good afternoon. This is Tim Wegman with BIS Commodities. Taking a look at the week in review. Let's start out and see where we close for the week. May corn down 5.5 cents at 3.77 and a quarter. Beans, the big loser this week, down 21 cents, a little over 21 cents at 10.28 and a quarter in the May contract. May wheat down 7 cents at 4.60 and a quarter. Taking a look at the livestock market, it's not good news there either. Cattle closed down $5.20 in the April contract at 116.05. April hogs closed a little over $7 lower at 58.42 in the April contract. Crude at this time looks as if it's going to close higher, somewhere around $66 on the week, up almost $3.50. The dollar looks as if it's going to close a little bit weaker, about 75 points or so, right at that 89.8 area. And the stock market looks like it's going to get hammered here, mostly in the last couple days, down 1,300 points, somewhere around 23,600 to 700 points, and if it closes down in here, that'll be the lowest close in the stock market since November. So a lot of negativity here across the board. Taking a look at the corn and soybean markets, let's look at corn to start with. It followed through on last week's weakness, Sunday night into Monday. Then we were able to stabilize futures. We traded in the 2 to 4 cent trading range for most of the week until overnight. We sold it off hard, only to come back close to unchanged on the day. And the reason for the hard sell-off here overnight, or some of the bigger news, is the reaction to the tariffs that was put in place. With $50 billion in tariffs that Trump had announced, yet to be determined on exactly what we are tariffing, but we did see some retaliation by China overnight, and everything isn't clear at this point, but it looks as if we're looking at possibly a 15% tariff now on fruits, steel coming in, and the possibility of 25% tariff on pork exports into China. So we'll talk on that a little bit later, but that had caused the market to sell off. We've seen a hard sell off about 4 o'clock in the morning, only to see it come back again by the close today. When you take a look at it, the market from a fundamental perspective, export sales were good this week, 1.5 million metric tons. They were good, but they were down from what we have been seeing. Obviously, it's still enough to put in place here to keep us on pace with our increased export sales number. Taking a look at the bean market, followed pretty much the same pattern as what the corn market did, or the bean futures, I should say. We've seen that follow through weakness on Monday, in a choppy sideways trade here most of the week. Wider ranges, big overnight sell-off, took out some nearby lows, pushed it lower, but we were able to bring that back as well on the close today, close to unchanged as well. Now the interesting thing in the soy market is bean futures actually closed higher on the week, so that's a very positive moving forward. Now part of the reason it closed higher may be because crush margins are outstanding right now for processors, not only here in the US but in Argentina and in China, so that is supportive moving forward. Might have been part of the reason we did see some of that strength come back into the marketplace. Export sales were good, 759,000 tons of beans, more than last year, still very good, but we need to make sure we continue this pace moving forward to meet the export expectations. We are still running behind of where we are as compared to last year significantly, and the 5-year average. Now there's other things involved here in the soybean futures market too. Is Argentina production still falling? Estimates this week down to 38 to 39 million metric tons. So we're seeing that way on the marketplace, as the rains have not fallen at this point. We're probably to the point of not doing very much good anymore at this point, so we're still trying to find a bottom in there. In the meantime, we're trying to find out how much Brazil has made up for it. Not as much as what Argentina has lost, but we're looking anywhere from 113 to 117 million metric ton crop coming out of Brazil. So another very good crop coming out of there to help buffer the drought losses from Argentina. Looking at the Commitment of Traders report, how is the managed funds or funny money playing this market right now? And this report showed us this afternoon that corn is down 20,000 contracts on the week. They're holding a 213,000 contract long. That is probably more than what the trade had anticipated. I think we thought we'd see a little bit more length shedded off there. Soybeans down 12.6 thousand contracts at 195,000 long. And there as well, I would guess the trade was looking for a little bit bigger reduction or shedding of length in those numbers as well. The big thing moving forward for corn and soybean futures is next week is the quarterly grain stocks snapshot of how much corn and beans is out in the countryside, and it's also the planting intentions report. And going into that report, estimates aren't out yet, but the trade is probably going to be looking for more bean acres than corn acres at this point. So we'll wait and see if we see a little bit somewhere around 89 million acres of corn could be an estimate, somewhere around 91 million acres of beans. We'll discuss that next week before those numbers come out on Thursday. That'll be the big mover next week. We'll continue to keep an eye on weather, and we'll continue to keep an eye on the outside markets as they can and will affect our markets as well here with corn and soybeans. Rolling on to the livestock market, not good there. Starting out in the cattle market. When you look at the cattle market from a cash perspective or a fundamental perspective, we've seen the choice cutout was down $2.28 this week at $223.90. Most of that drop is today, so we hadn't seen a big fall off on the choice, and that's following obviously the big future sell-off. Cold storage came out Thursday, 8% increase year on year for the month of February, and stocks. That was a decrease, not an increase. So we're seeing beef drawn out of the coolers at this point. The thing this afternoon we took a look at was the cattle on feed report. Trade was expecting a bearish report as far as numbers on feed and placements, and we did get that and then some. So we got 109% cattle on feed. That is a little bit more than what the trade was expecting. Marketing's at 107%. That was about 2.5% more than what the trade was expecting. Marketing's at 102 versus 101.2. A little positive there. So one would look at the report, see it as bearish, but because we did whack cattle futures as much as we did this week, I think that at some point may be built in. We've seen the April contract close 6 out of the last 7 trading days lower in here, and that basis still looks outstanding for hedgers. And as we've seen the cash hold in 125, 126, down a couple bucks this week compared to last week. But again, the big slide is on the future side of the market here. So we've seen some liquidation also from the managed money as well, as the funds were cut some of their length of about 14,000, a little over 14,000 contracts. So that is weighing as we see them trying to get out of the market. Thing looking that we're going to need to look at next week is obviously still at this point is this market getting a little oversold from a futures standpoint. Cattle on feed report again bearish, pretty much figured in. We'll continue to keep an eye on cash and that cutout. The trade is obviously concerned about the numbers that are coming at us, and the futures are trading that where the cash continues to hold in here quite well at this point. Taking a look at hog futures, that is just as ugly as well. We've seen the cash down $3.87 this week from a national perspective, just below 53 bucks. Cold storage stocks actually up 6%, month of Feb over last year. Belly's up 188% compared to last year. So a lot of bacon putting back in the freezer compared to last year. That being said, the amount in the freezers is fairly comparable to the 5-year average for bacon, for what it's worth. The big thing today and or overnight again was the announcement of a 25% tariff on pork exports coming from the U.S. That continued to weigh on the futures market as we pushed it down hard here. China does not import a lot of pork from us. They're about 10th on the list right now as far as imports. Actually, owning Smithfield, they do have pork processing plants here in the U.S. So not a great big deal, but it is obviously enough from when you look at it from that perspective. But from a futures perspective, it is ugly. We did see futures continue to fall. The April contract is actually gapped lower now 3 times in the last month. Trying to catch a falling knife in here right now. Looks as if the commitment of traders report continue to reduce their length. Took just shy of 2,000 contracts out of the market this week. That report's through Tuesday. I would think the funds are getting closer to flat right now for what it's worth. Looking at the pork market coming in next week, we do have a quarterly hogs report out on Thursday as well. Obviously, some very, very bearish numbers are dialed in going into that. So hopefully we can find some exhaustion to the downside here in the cattle and the hog futures to start next week. Next week will be a reduced week as Good Friday comes into play. If you have any questions about these or any other markets, give us a call here at BIS Commodities at 1-800-373-2525.